Let's check in on some of the big movers of the day. And we got to talk about Carnival shares closing the day in the red, even after reporting second quarter results that beat the street's expectations. The cruise operator saw a jump in demand, reaching an all-time high for quarterly bookings. City leisure and travel analyst James Hardiman telling Yahoo Finance earlier this morning that he believes the negative reaction in shares today could stem from Carnival's strong start to the year. We'll hear from CEO Josh Weinstein later on in this hour. Akiko, but when you take a look at these numbers out from Carnival, an extremely impressive quarter here from the company. Again, a massive jump that we saw in sales, revenue soaring up over 100% from a year ago. Yet the stock was up 80% since the start of the year. So a lot of that may be optimism already priced in.
Yeah, buy the rumor, sell the news, right? It's essentially what we're looking at. But I'd be curious to talk to Josh Weinstein later about the kind of momentum they're seeing right now, because he did say, look, this is the kind of performance they usually see in Q1 that has extended into Q2, and he's already talked about strong bookings coming through in 2024. So going to be an interesting conversation coming up later in the show. Now, shares of PacWest are closing the day higher after the regional bank announced a $3.5 billion sale of loans to alternative investment manager Ares Management. And you've seen PacWest shares there up more than 4% on the day. The deal, the latest of several moves by the lender to shrink its balance sheet, helped push several other regional banks today. And Seana, it is about those liquidity concerns at least being eased with this particular move. And you see just all regionals here getting a big lift on the back of that.
Yeah, exactly. And it kind of goes off what we have been saying over the last couple of weeks, some of that optimism returning to the discussion, to the narrative when it comes to regional banks. They are all well off the lows that we saw just about 6 weeks ago with the recent gains. The thought there is saying that the worst is over. There are a lot of questions, though, about the possible headwinds facing some of these regional banks going forward. Lots of talk about tougher capital requirements, what exactly that would mean to some of these smaller banks and their ability here to compete with the larger names out there. But again, a lot's going to come down to what we're hearing from these executives in a second quarter earnings and how exactly, strong their deposit sheets are and what they're looking at in terms of deposit flows. All right, let's take a look at another big mover, and that's Wall Street continuing to rain on Tesla's parade, at least for now. Goldman, the latest bank here to downgrade the company. We're looking at losses of just about 6%. And Tesla, just one of the names out there that has seen analysts really change their tune when it comes to their outlook for these companies. We want to bring Yahoo Finance's Josh Schafer with a closer look at this. And Josh, when it comes to Tesla, some of these other names, questions just about their valuations and if they come too far too fast.
Right. So that's the third downgrade we've seen from a major bank for Tesla in the last week now. We're actually going to have a story rounding that up on the website tomorrow morning, sort of what's going on specifically with Tesla, because it is a little bit of a different story than some of the other tech names. But when you compare it to the other tech names, we are seeing a common theme, and that is sort of a valuation call, right? So you've seen these big run-ups for Tesla, for Apple, for Alphabet to start the year. And then you're seeing moves like this from Goldman where they downgrade the stock from buy to neutral. But you see that price target moving up from $185 up to $248. So a big move up in the price target, but a move down in what they're rating the stock, essentially saying right now, that's a fair price for Tesla. Tesla is at right about $248 right now. So what a lot of these analysts are talking about is you have these big AI movements up, right, including in Alphabet and maybe even Apple too, just as that AI momentum has sort of grabbed these stocks. And now they're saying, okay, when we actually assess what AI is worth for this stock right now, maybe we can't quite project that. Interesting, UBS came out and downgraded Alphabet today, saying that AI might be too priced in and they're not quite sure where it's going to go, right? But they upgraded Meta for the same reason, saying people aren't counting AI enough into Meta stock.
Which was a little surprising to me, given this thesis that we've heard from so many analysts up until this point, and even UBS when it comes to Alphabet, the fact that they don't see a lot of that hype already priced into Meta. I almost thought that was maybe more of a contrarian take.
Yeah, it was interesting because they're talking about Meta's AI model that I don't think a ton of people have talked about yet and really seen when we're talking about an AI chatbot, right? And sort of what that means for Meta in search. And so UBS listed Meta as a major contributor or competitor, I should say, to Google in search with AI, which I think a lot of people have sort of said, well, that's Microsoft and Alphabet's battle to level out. But they're saying Meta's in there. I do think that is probably a different take. It'll be interesting to see if that gets a little bit of pickup as we see what that Meta AI chatbot looks like, too.
Certainly will be. All right, Josh Schafer, great stuff. Thanks.